All right. Apologies if I'm a little hoarse. It's allergy season starting up now, so my body does not do well. So let me pull up our positioning here. Again, if you guys have any questions, type them in the chat. We'll go through kind of what happened today. Some interesting positioning that has hit the books this morning and kind of changed the map, and you guys got to see some more negative gamma kind of play out on this run higher. So you can kind of see how all this works, how the positioning came in, and give you guys a better understanding of all how you kind of put it all together to be able to take some trades off the data. So I want to show you guys the initial snapshot from this morning. Right here on this end is when the snapshot was taken. So like 9:30. So right off the open. If you kind of take a peek at, and I'm going to change this just to positioning for now, and we'll get into the gamma side, but positioning, it was relatively light, I would say. Couple key strikes to pay attention to, right? Downside 67.40, upside 68.20. We kind of opened up in a positive gamma pocket, which is the first time in a while that I think we kind of opened up in some type of positive gamma regime where there was more so negative pockets forming instead of it being the opposite where we're in negative gamma and the positive pockets are forming. Yes, Joe, I will explain the heat maps and how to read it. So all you're looking for on this, and this is important for you guys to understand how the positioning kind of moved today, is looking at positive and negative gamma on this left side, this heat map here. Anything that you see and that's white is considered neutral gamma for my heat map. Anything that is blue is positive gamma, and anything that is red is negative gamma. Okay. Simply put, if it's in positive gamma, dealers are going to trade against price, which obviously means there's the potential for a lack of speed. And then negative gamma, it's the opposite. Dealers are going to trade with price as their delta kind of expands, and they have to hedge with price action instead of against price action. So we talk about it in a way of the acceleration of delta or speed to make it really easy. Is all we're really talking about from a gamma perspective. Very simple. So when we're looking at this heat map, you can see how the peaks kind of play out, which is some of the higher gamma levels. These often act as support and resistance on these green lines. And then these black lines that you see, or for some of you that might be dashed, those are your gamma flips. So that's where we flip from positive to negative gamma, right? Arlick, I record all of these and I give them to the guys. I'll ask them where the last few were that haven't been posted, but I'll make sure and I'll ping them again to get them posted. The one that I did from last Thursday was really good for the basics. We dived into everything on a much more basic level. So I'll make sure that those are there, and we'll have this one recorded as well. Cool. So let's take a peek at what kind of happened. Now, how are these gamma maps even created? And it's created from the positioning. So you have the broad positioning across the board from a market maker perspective, and then you also have the 0DT positioning. The 0DT positioning becomes a little more important because gamma is largest at the money closest to expiration. What's closest to expiration? Something that's 0DT, especially as the day goes on. So you see a lot of these positions we'll call push out onto the map. In particular, from this morning, you had some of these negative gamma areas here, kind of pushing out from this little node out onto the heat map, making this negative gamma pocket. Okay. So on that note, I want you to watch kind of what has happened throughout the day, especially with this rally that we got and kind of what happened. So we're going to scroll down here. I want you guys to pay attention to this left side. This is set up for positions, 0DT, all customers. So this is just the call side and kind of how they are positioned into the day. I want you to pay attention to this 6830 strike. So again, we talked about it earlier. If a customer is long a call, that makes the dealer short the call. They're on the opposite end, which is what creates the short gamma for our heat maps and for how dealers have to hedge. It's where you get that negative gamma. So pay attention to what happens here on 6830. Coming in, 7,400 contracts. I'm going to keep just moving it forward. Okay, so we had some more adding here, 6830. Now they're up to 11,000 contracts. Keep moving higher. Another add. So now we're 30 minutes off the open. They're up to 20,000 contracts. Okay, more adding, 22,000 contracts. Now these are significant. understand that we pay attention to anything that's over 1,000, 1,500, 2,000, right? Anything over five is considered even more significant. 10 is really getting up there. This is 22K, right? So this is a very significant position that's being built. Now, what can we take from this? Someone somewhere, and we don't know their book, right? You have to take, there's a little bit of an inference or art with this. Someone's just chasing upside and getting long, and they're getting long deep out of the money at this point. What you take from that is entirely up to you. Some people take this as a directional bias and they need to tail it. I'm going to show you why sometimes that works and sometimes it doesn't, because I'll show you what happened yesterday. But for the sake of what we're doing here, I want to show you what happens when people add these positions on. So we'll keep going a little bit more forward, and then I'm going to show you what happened to the gamma picture. So we'll stop about right here. They're up to about 23,000 in total long calls at 68.30. Okay. Now let's look at what happened on the heat map. Go back. Let me get to the start of day. And let me take off the candles so you don't see where we went. I'm going to remove the troughs for now. We'll just watch the red pocket. All right. Pay attention to what happens. You see how it's getting more and more intense, right? The color's getting deeper and darker on this as people add these positions, right? So it's getting deeper and deeper. So that's that negative gamma that is being created by these customer long calls as dealers take the other side, right? So now you have a couple things you can take from this. One, if you were trying to look for a directional bias and you decide that, hey, I don't really care about what they're doing or what the rest of their book, you could see this as, hey, they're chasing upside. I want to be a part of it. That's entirely up to you. That's part of the art of reading the data on the trade. Or if you're like me, I would wait until we get into said negative gamma pocket and then play for some sort of continuation on a move into the negative gamma area. So you could have done it multiple ways. In this instance, I would have waited for a retest of the gamma flip and then try to play for price action to get long as we push higher into this negative gamma. So what ended up happening? Exactly that. We got a headline today, a catalyst, pushed us up here. And I'll zoom in a little bit into, negative gamma territory, kind of did a little bit of a retest on the negative gamma on the gamma flip. And then again, more headlines, price action start pushing up, and now dealers are chasing all of this. And by chasing, I mean they are buying with price. Again, in the same way that we're going up with negative gamma, we can go down with negative gamma. So if they want to come in, buy it up and then sell, dealers are going to trade and sell with them as well, right? That's the one thing about gamma you have to understand is it's not directional, but you can make inferences and trade understandings from the data that you give or the data that you have. In this case, some people got long that I know as soon as they saw those calls coming in. Other instances, they traded a little more conservative like me, where we just played for another retest of the flip before getting long and hoping that price action wants to get into that pocket. But again, that's part of the art of the trade. Does that make sense to everyone in the audience? You guys understanding the basics of that concept of the gamma and how those positions create these heat maps? Cool. Okay, so this is a great question, Ruben. So Ruben asked, and I want to show you, um, I want to show you what happened yesterday when someone was chasing calls and what happened in their position. But I'll get to that in a second to kind of show you the directional bias. Sometimes that could get you in a little bit of trouble. But Ruben asked a great question. He says the gamma map with candlesticks seems to be much more generalized versus the gamma by strike. And how many times don't coincide? Many times the gamma map is positive, but on the gamma by strike, it's the opposite. Why is this? Great question. So you have to understand how all this is kind of created, right? So let's just say there was zero positioning on a 0DTE basis. This is the easiest way to explain it. There was no positioning on today, okay? But you have positioning for one DTE all the way out. There is a regime or a map that would be created off of that information, right? So let's just say in totality, you see everybody talk about online positive regimes, positive gamma regimes versus negative gamma regimes. That just gives you an idea of what we're in. But because gamma is largest, 0DT, closest to at the money, these positions that get put on an intraday basis from 0DT push out onto that regime, if that makes sense. Okay. So just because you see A negative gamma strike does not necessarily mean that there's going to be enough negative gamma on that strike to push out onto the map. This is a great example of this today. We, like I said earlier, we opened up in a positive gamma pocket with a small negative above. People added long calls, creating short gamma for dealers at 6830, and that's where you get this big blob. But if you look down at 6800 for today, you have some dealer short gamma here, negative gamma, and it's only pushing out just a little bit because the size is not large enough to offset some of the other positions or other areas that from other positions that are later dated, that it might have a lot of gamma on them, even though we're not closest to the expiration yet, or that these positions are just not large enough to overtake some of the others, like let's say the 67.95 or the 68.10. Right. So that's part of the calculation and the way that the heat maps are created to help you understand where the flips are. If you didn't have the heat map and you were just trading off of this, while there's information to gather from these strikes for potential support and resistance, you're not going to truly understand where the flip lines are or where gamma actually flips. Right. Just because we're right here at 6830 and now you got positive gamma below does not mean we instantly flip to positive gamma until we get to here. And now it's negative gamma. And then below that is now positive gamma. That's not how it works. That's not how this is calculated. Okay. Does that make sense, Ruben? Right. So that's one thing you take. If you come into the day and you have an understanding of where the regime is, and then you layer in the 0DT positions, that will change the function of what happens. For instance, tomorrow, if I wanted to show you what the map is, remember 6830 right now is the big level right here. If I show you upcoming day, look at this map. It's much more calm, right? Positive gamma regime, right? With maybe some of these negative pockets. So when you go to the next day, and I'll just get rid of all these lines, look at the map. We're neutral to positive with these small little negative pockets pushing out. But if we go lower, you'll see that down here, we get a larger negative gamma pocket. And then below here, it's positive again. So once the 0DT positions come in, all of these little half circles, depending on the positioning, will either push out or shrink depending on what the positioning is. So if you know going in, hey, positive gamma regime, but someone decides they want to come in and hammer long calls, that is always going to create this very large negative gamma pocket in the same way you saw with the JPM collar from the 31st, where once we got to that collar position, right, and we got up to it and through it, the gamma exploded. There's a lot of hedging that had to happen, and they were buying with price, and we just ripped another 20, 30 handles. Okay? Now, what I want to show on all of this as well, yes, exactly, Arlick. Yes, it takes into the heat maps take into account all of the positioning that is currently on the book, and it's then there's a math obviously that has to happen in order to calculate where the flips and where the lines are going to be, and they're scarily accurate. When I first started looking at this, I've tried pretty much every service that has this type of data, and I kept coming back to OD. And actually, that's when I met the guys and started talking to them because it's scary how good they are at mapping the heat maps, in particular gamma flip lines and charm flip lines, which are very easy for most people to understand. Right? Support and resistance at charm flips, support and resistance at gamma flips. That's an easy concept. And then if you understand what has to happen in the in-between from a hedging perspective, it makes it easy. Right? So, but Arlick, to your point, what you can do going into the day, and I'm going to set this. This is a firm position. This is synthetic long I was looking at. You can look at the net picture going into a day, and you could still form some sort of opinion just off the strikes, right? So if you're looking at this on an intraday basis, you could say, oh, okay, 68.30. Oh, wait, no, let me switch this to market makers. Right? We know 68.30 is a big potential negative gamma zone. We'll see how that pushes out onto the map. But then you can also form, okay, I got some mild support here at 67.40. I got some support potentially at 67.95 when you were going into the day, depending on what the positions were. And you can form a plan off of that from a range perspective, right? So there is value in understanding the bigger strikes. And then you could take that information from where there's potential inflection points from those strikes to understand what part of the gamma map you are on, right? Whether it's still positive or still negative. But then you use those positive strikes to understand potential support and resistance. And then on the negative side, you look at those for like high sensitivity nodes, right? And you stare at this long enough, this will all get really, really simple where you can make a flash inference on what's kind of going on from a gamma perspective quickly. So, what I want to do though, to show you why we talk about gamma not being directional. Just because someone bought all these 6830 calls does not mean we have to go up there. In today's particular case, we started catching a bid off some news, right? That negative gamma helped fuel some of this move, but I want to show you what they did yesterday. Yesterday, we did a whole lot of nothing, right? Whole lot of nothing. And I want to go back and show you what they were chasing yesterday. So I'm going to zoom in here. Again, this is customer sided calls from 0 to T from yesterday. Okay, so this is kind of pre-market, I believe. I mean, it's 11:50. Let me go back a little bit further. Okay, this is what we kind of had in the pre-market, right? I'd call this a little muddy, right? There's some positions on each side. Again, we had a large gap up from days before, right? So still positions here. There's some interest. But again, watch what they do at the 68 tens and up in this little sector. They started hammering calls again, right? So now they're up to 10,000 on the 6800s, another 10K on the 6810s, and they hammered them pretty much all day long, right? And they just sat in them for most of the day. Well, what did we do with price? Let's go look at our map. Did we break through that strike? Did we even get to those strikes? No, we didn't. So just because you see someone hammering these calls, you can try to make, they're obviously betting on upside. You don't know their full book, obviously, and what they're actually doing, but you can make an inference that, hey, they're probably looking for some more upside in some capacity. Doesn't mean we get it. Just because someone buys it doesn't mean we get it. And you could see that here. We never got anywhere near 6,800, 6,810. We got up to like 90, I believe. So all these call buyers got smoked, right? Versus today, they didn't. They got paid. So it is what it is. That's why you have to take some of this from a directional side with a grain of salt when you're making like your inferences and the art of all of this. But that's like the difference. So what I'm driving at more so is just because you see someone accumulating a large portion of long puts or long calls does not necessarily mean that we have to go there. Okay. In this way, someone today was heavily betting we're going to go higher. We got a nice news pump, and they obviously are going to collect a payday depending on when they close it out, but we don't know their entire book. So Gage was saying crazy reality today. I was expecting chop given we open it. Yeah. So that's the other key. Going into today with the straddle and what it was priced at and the way the price action was this morning, we didn't really do a whole lot. It was slow, right? In this positive gamma environment, we were slow. We had a low of 67.60 and a high of 67.85 until we got a catalyst. That's 20 handles in range, right? So you're 100% correct, right? You had the right read. Now what you have to realize then is if there's a catalyst event like we had and they start catching a bid, that's where you can make an understanding of saying, okay, I know the high sensitivity strike for the day is 68.30. If we can get into that negative gamma, I might have a way to be able to play the momentum without having to guess that we're going to go there, right? You're trying to put probability on your side. Some people might look at that call buying and just say, I want to get in on it. I'm taking a lotto. I don't care. Others that want a little bit higher of a chance of it paying might wait and be patient and try to catch part of the move than all of it, where they're looking for a rally through negative gamma because there's going to be some momentum from the dealer side versus, or a fade once we start going down versus trying to, guess that we're going to go up. But your read off the initial map, 100% correct. Look like a chop day based off the data you have, but you can't control what the news is. Okay. Now, I'll answer more questions. The other thing that was interesting to me, and this is what I was looking at with the firm side, and I'm just gonna point it out more than anything. I was also in the morning note, but you guys can break down customers here by non-professional, professional brokers, and firms. There has been a firm who caught, and again, we don't know their book, their whole book, so bear with me on this. but they were sitting in what we call like a synthetic long, where they are short the 6,700 put and they're long the 6,700 call. They had the 6,700 call on before the overnight move a couple days ago, and then they shorted the puts yesterday, which obviously means they got paid. Now we don't know their whole book. We don't know how they're hedging. We don't know any of the other positioning on there. So you always take that with a grain of salt. But you could see here when we put it to DEX, which is just delta exposure from today's basis. They are very sensitive to what happens at 6,700, and the higher we go, the better for them. So that's just an interesting thing that you guys can look at if you want to try to segment the data as you get more and more advanced with this. Okay, so next question we have is Kakashi. Given today's charm map, if we were staying below charm flip towards the end of the day, we have more selling pressure right now. Yeah, so charm end, for those that are new to this, charm is just talking about how delta changes with respect to time. We talk about it with the flip lines as guardrails of the day that we can obviously get above or lower, but they typically act as support and resistance. And then the other end of it is we talk about it from a tailwind or a headwind perspective. Whenever charm values are positive, that is a headwind, right? Dealers are going to sell passively with respect to time as the delta on their book changes. This does not take into account any positional changes that we have, right? If someone takes off a position that's large, it might change the map. So that's why we have the 10-minute intervals of updates. But this would be a headwind. And the values to determine how much futures they have to sell when you're in these red areas or the positive charm values is just to double the number, right? So if it says, let's say 50, there's 100 futures over 5 minutes that they will have to passively sell. The larger numbers are where it gets more interesting, right? So when you're looking at charm paths, just because it's suppressive does not mean we have to go down. There will be days, though, where you get a setup where you have suppressive charm with maybe a positive gamma magnet below and there's no bid in the markets and we just grind lower. There'll be other days where you have supportive charm, the blue areas, and a positive gamma magnet above, and we might grind with that tailwind pushing us higher, right? So that's one thing you have to take. Just because it's negative doesn't mean we have to go down, in the same way that negative gamma doesn't mean we have to go down. Negative gamma is just the reaction we're going to get from delta to add potential fuel to whatever direction that they decide to go. So if you look at today, we pushed through all the suppressive charm. Look at the values. They're not super large yet, right? If you think about it just from today's perspective or the way that we're trading, if we're talking about 150 futures contracts over 5 minutes, is that significant? Yeah, depending on the time of day. But when you have a headline and there's a bid on the underlying, they're just going to absorb that potential selling pressure. And what you don't know is how much of it is going to be offset by this negative gamma that you have, probably a decent amount. So there's just caveats to everything. And right, and there's going to be days where you're going to see a really good setup with gamma and charm mixed. And there's going to be other days where you're just looking at charm for potential guardrails, where we could go up, we could go down until the values get significant. With what Kakashi is saying, he's looking at this area, this larger, deeper color for suppressive charm and saying, hey, if we are holding this, then there is the potential for more, passive selling. And he would be correct. Right. So into the last hour and a half, anything in this range, if we're sitting there, there's just more liquidity being put into the market by market makers as they sell. Right. If price action wants to move in either direction, that gamma will also be negative. So you're going to see a potential for a lot more speed. So you just got to be careful when you see a large negative gamma node mixed with some passive charm selling. There might be some really good end of day trades for you guys to be able to take off of this information where you follow whatever the momentum might be. But the way that you are looking at it, let's say you didn't have the gamma picture for today right there, and you're just looking at charm, and you're keeping it very simple, then yes, Kakashi, this area would be a lot more passive selling. Gamma trough. So personally, this is the personal choice. I pay attention to the gamma flip lines and gamma zero than I do in the gamma peaks more than the gamma troughs. That's just from my experience. There are people that look at the troughs and utilize this data as a way for potential areas to fade, or like, hey, this is a very important inflection point from a negative gamma perspective. That's entirely up to you and how you want to use it. I personally just have stuck with the gamma zero lines, gamma. So those are gamma flips and the gamma peaks. And I'll pay attention to the trough. The troughs are usually just coming out of very negative gamma levels, right? So I just look at them saying, okay, above or below this is going to be important because there's probably some increase of gamma or delta from on either side of that line, right? Joe, you mentioned last week about dealers needing to buy or sell based on the data on the right of price, and dealers needing to do the opposite. If a dealer IG, if it's but yeah, okay. So Joe, that's a great question. So what Joe is asking is kind of what I was talking about here with Charm. What Joe is saying is last week dealers needing to buy or sell based on Charm data, right? Whether it's negative or positive determines whether they're buying or selling. And he's seen end of day that sometimes even when we get into these areas that it doesn't necessarily mean we go down. You are 100% correct. So yesterday is actually a great example. InvestWise was with me on this of this happening. Okay, so let me go back a little bit. So this is the part where I'm talking about liquidity, end of day, and just information or data that you kind of have. So let me go to end of day. So that would be what? It'd be 1600 hours. Okay. So this is, 10 minutes before the close. Okay. If you're paying attention to on this right side, and I know it's not as easy to see, but if you're just paying attention to the charm values, you notice these candles, how we pushed higher into these negative charm values, right? Okay. So that's always potentially possible. But if you were really paying attention for the last, let's see, I think it was last half an hour, there was a rather strong bid at times in the underlyings. Like we talk about, it's kind of retail speak, but we talk about like programs or algorithms a lot. There was a lot of people kind of slapping the ask inside of those markets, but we didn't do anything in particular in like this area, right? We kind of hovered at 67.75 to 67.65 or whatever. We couldn't really break higher, right, from all of that passive selling. But you have to remember, if price action wants it and there's enough liquidity in people slapping the bid or mock the last 10 minutes where there's even more liquidity, and then yesterday there was a buy side imbalance, the charm pressure that you have can be absorbed from that, right? In particular, too, when you have negative gamma, because think about it, and this is where it gets a little muddy. So I'll try to keep it very basic, but think about it. If price action wants to go higher and you're in negative gamma, what happens? Dealers trade with price. But on the flip side, if you have charm values that are positive, that means passively they have to sell. Figuring out the difference of math usually isn't worth it, right? Especially for a trade like that end of day. So just understand that with respect to time, they're passively selling. If the values are large enough, in particular, when you're not getting a very liquid window, let's say half an hour, 45 minutes before the close, it is much more likely for that move to kind of happen then. And then when you get to the last 10 minutes and you got mock and all this liquidity coming in, again, it can always be absorbed. So that's the one thing with gamma and charm is understanding that it can always be absorbed if price action wants to absorb it. If someone really wants to come in and hammer buy 5,000 futures contract, they can, right? They can do that. Anybody can do that, right? Does that make sense, Joe? Are you understanding like that? Then there'll be other days where you don't have that problem, right? There's not enough liquidity on the bid side to go up, and you'll have positive charm values and will go down. So just got to be careful. That's all. So you asking Kakashi why we have pinning effects on positive gamma versus negative gamma? Is that what you're asking? Yes. Okay. Well, think about it. Just think about what has to happen on those strikes, right? So, if you look at 68.30 right now, let's just use it right now, that we could pin at 68.30. It's neutral charm on that end towards end of day, and it's a lot of negative gamma. There is the potential we pin there. However, typically with negative gamma strikes, think of it as like a repellent or an accelerant through the strike. If you look at what we've done today, we've now have tagged the 6830 negative gamma strike twice. We haven't been able to go through it. If we go through it, there is the potential for that increase from the dealer's perspective to add more fuel to the fire on the buy side if that's what price action wants to do. When we get into the positive gamma clusters, it's always the opposite of that, where we are getting usually a grindier price action, and I can show this. Right, this is always the example I pull. Get this grindier price action into these positive gamma areas, and that's where the pinning effect usually comes into play. Why though? If there's an underlying bid, but there is dealer selling into large positive gamma clusters, let's just say for easy math here, what happens? It's net even, right? So you tend to pin more inside of the positive gamma sides if you're looking at this in very simplistic nature, and you look to push away from negative gamma strikes or push above negative gamma strikes. Doesn't mean that they don't act as resistance, right? As the delta of those changes, right? You still have to have price action want to get through. It's still important to pay attention. It's just you're less likely to pin, to those levels. And if you do, it's probably more by coincidence than anything else. That's just from my perspective and how I've looked at this for so long. Yes, Joe, great. It's absolutely correct. Butterflies work great for those particular positive gamma magnet trades. So when we're looking at something like this positive gamma magnet, this is a great way to play a fly, right? There's so much positive gamma here. There was a bit on the underlying. Better yet, when you go here, if you see supportive charm, those are typically when we take fly trades, right? And you're going to center the middle part around whatever the positive gamma cluster strike is. And then you can go, going 10 wide, 15 wide, 20 wide, depending on what risk you want in order to play that upside. Because you have to remember what you're betting on to get the max payday on a fly is you're looking for you to not go through whatever your sold strike is, but you want to stay above whatever the bought wing is, that first one. So if it's on the call end and you were playing a fly today and you're buying a 6820 by 6830, you want to finish in between, right? That to get your max kind of payday. You want this to decay to zero because it's sold, but you want to stay above this to get the positive delta from it, or however wide it is. But they work way better in positive gamma environments. You can use them on the negative side if you're trying to minimize your risk, of course, or you can just play spreads. That's obviously up to you, or you can just go long. It depends on what your thesis is, right? On a day like yesterday, when everybody was going long calls, we did go higher from the time that they bought those long calls. But because they weren't spread and they weren't a fly and they weren't anything like that, they decayed basically to zero by end of day, right? So unless they took them off through that small grind up, they didn't get paid. But that's getting to the art of, being able to trade with this data and information. Okay. Any other questions on any of this? Was this helpful? Is this starting to click for some of you? Just remember too, with this information, it's just about giving yourself edge and giving yourself higher probabilities if you understand what a market maker has to do. There is always, no matter what anybody tells you, there is an art to all of this and figuring out how it works. It does when people talk about this online and they say, oh, we have this here, we have to go there, or this is there, we have to do this. It's not how it works. This isn't a directional thing, right? So just because you have a cluster somewhere doesn't mean we have to go to it. Do we typically gravitate towards positive gamma clusters if they're not super far out of the money and we have a grindy tape higher? Yes, we do. If you have the tailwind from charm. But that you could take with a very low risk trade. There's other times where you'll see people saying, oh, once we get up to this, we have to do it. We don't have to do anything. And I know I say that a lot for those that have been listening to me for the last 3 weeks, but I just stress it because we're not here to BS anybody and tell you that taking this information is going to tell you exactly what's going to happen today, right? There's plenty of other variables in the market. Price action always reigns supreme, but this gives you some sort of edge with regards to these clusters. It depends on the day. Yeah, Ruben, definitely tougher to pay attention when when you're trading. Erlich, so do you prefer trading using long delta options like buy, vertical spread, or selling? Depends on the environment. So me typically, I trade a lot with futures and SPX 0DTs. If I'm scalping, I usually use futures. If I am going to be trading, something like this today, and thought based off of that call buying, I would play a spread. I'm usually always playing some sort of spread. If I don't know the timing or I don't have a thesis of what I think the timing is going to be, if I'm playing for a pin trade, and it's going to be a grindy tape, I'm always playing a fly. But if I'm like, hey, I think based off of what I'm seeing, some of these bullish positions, I want to be directional and I want to go long. But I don't know the timing of it. I don't want to get killed by theta, so I will typically play a spread. If I'm confident and we're playing momentum, right, because we got into a negative gamma pocket and there's this underlying bid, then you could just go. I would go long delta and not even worry about playing a spread. But that's just me. Everybody has their own risk and their own way of trading all of this. Then when you get days where we're in positive gamma environments, there's not a lot of negative gamma anywhere, and we get into those crazy nodes like I showed here. Well, if you played a fly, that's great. But what's the other thing you could do? You could sell premium above it if you don't think we're going to get above that gamma level, right? There's so much selling that has to take place in this. It's going to be tough to get above it. So you could sell premium. Usually, though, by the time you get down there, right, with a couple days left, and the straddle's so low that premiums are kind of washed out. So just you have to depends on the risk that you want to take. But that's just how I do it. Yes, I do, Ruben. I'll drop my X account, and then I run a group. Oh, this is Wall Street Jesus's account. Hold on. I'll drop my link where I talk about this stuff. So that's my social. And then I run a group called steamroomtrading.com. And we have full people that are trading, $5,000 in size to people trading $30 to $50 million books. Some of which that are focused on this, which is our 0-day stuff, and then others that are focusing on a much bigger picture. Sure, Joe. So the DEX stuff. So I only brought this up because I was curious and understanding how it's mapped, and seeing what else was on the book for the day. But all the DEX is giving you is the delta exposure from the positions that are there. In particular, I'm looking at this from the firm perspective. What was interesting to me and what I wanted to see just for today is because I saw this synthetic long, and if you understand how these positions are set up from a delta perspective, there isn't much to do from a market maker's perspective. If you had no other positions on the book, I'm just talking about this particular position. This would cancel itself out from a market maker hedging perspective. However, there is a firm that has a large amount of delta exposure because that's who put it on, right? You can break this down by customer that has a lot of delta exposure at 6,700. So the reason why I was interested in this and why I was looking at it was because today, on top of this short position that we had here, if I put on all customers, this line exploded to 1,500 short puts, right? Because someone on the retail end was selling a short put spread, right? They were selling a put spread, right? So they sold the 6,700 by 6,695. So I know that this whole thing before all of that is actually a directional bet because of this synthetic long, and they have a ton of delta exposure, 6,700. So the only thing I'm taking from this is just for today, from the firm's perspective. And again, I don't know what their book is. I don't know if it's a hedge. So I have to caveat all of that. That strike just has high sensitivity for a firm. So I was looking at it from a perspective of, okay, there might not be a market maker hedge or anything that has to happen at 6,700, but somewhere there's a firm who's net long a shit ton of delta at 6,700, and that's about it. Right. So that's the only time that I don't really look at the DEX stuff too much. Personally, it's only mostly with firms or professional customers. And it's more out of curiosity because otherwise it gets too muddy. But definitely, bias from that if that's what you're looking for. JBWH, can you go over the JPM collar? Yeah. So what in particular are you asking, JB, about the caller? Are you trying to understand what they did on this last roll? What happened on that day? Right. So I've covered this a couple times, but I have no problem going back. Like if you're talking about what happened on that day, right? This is the same thing that you saw today with this large, and that's what's crazy is that JPM caller long put they had the same amount of contracts basically as what we had today at 68.30. Yeah. So what we saw today is the same thing we saw at the caller. So this is back on the 31st, right? There was a ton of negative gamma sitting here throughout the day. We know that that collar is not going to come off until end of day, right? When they roll it to other strikes, but it's going to stay there through expo. So that's the one thing you have to understand too, even for today at that 68.30 mark, is if they start taking that position off, that changes the entire gamma landscape, right? So that's something to pay attention to. But if you're looking at the collar, we know for a fact they're not going to take it off. So we had the Iran peace talks news come out as a catalyst. We ran through that strike heavily and fast, and the negative gamma helped fuel that move from the collar, right? And it's the same way that happened today with the 68.30s. We got into it, started to fuel on its way up. We kind of bumped our head on it, came back down, fueled back up again. That's the beauty of negative gamma of not being directional. It's the same thing that happened with the collar. When they've now rolled the collar, and I don't want to speak without correct data, but they're not using SPX options anymore. Okay. They're using something called SME through the CME group. I've put out feelers to my group of people that know people that handle a lot of that trade on the JPM side to try to get some more information on how all that's going to work. And I know everybody I know D is working to figure out how all of that is going to interplay now in the indexes. If you know the strikes, then at least you have something to play off of. I don't know how it's going to be inputted onto this yet. I haven't even looked, to be honest. But that's the difference this time. It's the first time they're not using the SPX options complex. They're using something called SME through the CME. So what people will look at, and this is the part we don't know, and why I don't want to speak, is what's going to happen when we approach that short call level, right? Most people are going to probably have it marked on their chart as a large positive gamma node, and that we are probably going to bounce off of it, or that's going to be resistance. That it probably will be, and for some time, who knows? We have gotten above the JPM call strike. It's not like it hasn't happened before, but I don't want to misspeak about the hedging dynamics of it until I get more information from everybody. In theory, it should be relatively similar. We just might not see it on the heat maps, but that part I don't know. Erlich, yeah. So sorry if I ran through that a little too quick. Let me go back. So what I'm talking about here is you have a really cool filter that you could put on the customer side, and we haven't touched base on this before. Keith actually made a nice little post explaining everybody that you can do this, but you could flip to what customer you want, right? So what I was looking for is I like to look at what the firms do or professional customers. In particular, I know this one's a firm. What they had, if I go back, let's see, when did we get the pump? What day was that? I got the overnight gap from the 7th into the 8th. So let's just go to the 7th. Maybe it was the 8th that they put this on. Oh, wait, no. I got to go to a specific thing. My bad. Hold on. I got to change the strike to not be 0 to E. It needs to be specific for today, which is the 9th. Okay, so this is what I was paying attention to. Again, caveat, we don't know what a firm's book is. But if you were paying attention to what this potential position is, there is a firm going in before the day of the whole overnight pump that was long 6,700 calls. They're long 10K of them. Okay. Then what I noticed after all of this was the next day, at some point, they shorted the puts after the gap up. So now their delta exposure, because if you're short the put there, that means you want it to expire worthless. So you want to go higher and you collect all that premium. And then on the long call, you want to stay above it, right? Because that's part of your delta. So all I was looking for is like, okay, this is what we call a synthetic long. And all I cared about, again, because there's no hedging effect really from this as we get to it from a market maker perspective. Like if you look at the math of the positions and how they move, and again, we're not talking about IV changes, we're not talking about the rest of the map, just the specific position. It's not a ton of adjustments that have to be made. So when you look at the gamma picture of that strike, there's not a lot at 6,700. Remember, because it like net breaks out. So there's no, we'll call it gamma sitting there. Right. There is gamma, but just for the market major hedging perspective, there's not. So then all I was doing is saying, okay, that's interesting. What else do they have for this expo that and how sensitive are they to that strike? So I just went to customers, firms, changed it to delta exposure, and I can see that all they care about is that's just a high sensitivity strike for them. That's all I was deriving from it. So again, when we're looking at the delta exposure or looking at the positions, you can make an inference that they're bullish. It doesn't mean that they are. They have a lot of complex orders that they can go in. But in this particular case, it's just I found it funny that they were long into all this Trump stuff, whether they were chasing upside or whatever. Then they got short of the puts, and now they're making hand over fist, at least on this particular position with this move higher today. So that's all. That's all I was really gathering for it. And then when you see the positioning for all customers for today, you'll notice how it just changes. So it's just important to know like what the positioning is on the underside. So if I see all these short puts like I do today at 6,700, I know that half of those were sold the other day, right? For whatever price that they got and was part of their synthetic long. And I know that today, someone else from the retail cohort of people was selling a 6,700 by 66.95 put spread. So, but I know that they're showing up on a 0DT basis, but they weren't put on all intraday. So it's just how I'm trying to, look at the data and figure out how many people knew about all the Trump news more than anything else. So it's just another way to hash the data. That's all. If you're trying to keep it simple, most of what I'm doing on this last part is probably not necessary for most people. You could just stick to the basics of understanding the high inflection points of positive and negative gamma, and looking at charm flips and gamma flips, and you'll probably do just fine in this market. So that's the part is I don't know. I don't know what's on their book, Ehrlich. I don't know. But if you're looking at the position and they short that put while they have the long call, it's just considered a bullish. It's just considered bullish, right? They just have more delta exposure. And the higher we go, the more that they make, right? That short put will probably expire worthless now. That long call will be deep in the money and they'll get paid on it. That's all. So from the firm's point of view, and let's just say they had nothing else on their books, like zero on their books, and this is the only position they put on, they were just really bullish for whatever was going to happen. Ruben, I use OD score on mine. Oh wait, do I? No, charm I have the absolute values, I believe. Yeah. For Vanna, I have the OD score. Yeah, exactly. That's it. And again, you don't know what they have. And I know I've said it 12 times, but I have to reiterate it because someone else is going to go out there and be like, oh, he said that they draw 100%, but you don't know. The same way yesterday those call buyers got smoked and today the call buyers got paid, right? You don't really know. You just have to take some of the data and make some inferences off of it. And they did it again the other day too. There was another synthetic long sitting on the books for 6,600 from a firm a couple days ago as well before we had this move higher. So maybe they had that position, they rolled it up, got long the calls, waited for the put to be expired, then rolled that put up the next day. I don't know. No idea. Right? If they're chasing upside from their perspective, let's say, and they were confident of a massive gap, but they also don't want to have too much exposure. Why would you short the put and buy the call at 6,700 at the same time when that put is so deep in the money? You know what I mean? Like, again, I'm making a ton of inferences here. Yeah, no problem. InvestWise, the negative gamma is around the gamma trough. Can you please go through it again? Yeah, InvestWise. Let me there's I'll send you the documentation. Let me grab it on the gamma trough if you're interested in that. Let me grab it. Just think of it as positive gamma. The peaks are coming out of it, right? If you look at the lines, you'll notice it's always a green line coming out of the positive, and then anything that has the negative, or even if it's a small negative, that's where the yellow lines are coming out from the trough side. But if you want a little one, they did a better. There's a good explanation of the troughs and whatnot here on their website for the heat maps. Um, I mean, I can if you want. I can hypothesize. I mean, here's the thing. The way I would look at the market for end of day today is we're sitting right on this 68.30 line. So the way I would look at it is if we can get above the charm flip, which is sitting here at 68.35, and you have this negative gamma, right? That now you flip to passive supportive charm plus all this negative gamma. Maybe with another catalyst, maybe with liquidity for mock, not sure, or maybe it's just price action wants it. I could see more upside going higher. However, if we can't get above this charm flip, right, and we don't catch a bid through 68.30 and actually hold it, now you're getting into this pocket of passive charm. Maybe that adds a catalyst from the passive selling to what happens on the negative charm side. And now that passive selling gets expanded or explodes from the negative gamma, and the bids cannot absorb that, right? That's the part I don't know. So the way I would look at it is into end of day, 68.30 is your key strike to pay attention to, strong above, weak below, right? Changes as positions come in, especially if they close this out. So now what you have to do throughout the day is you have to watch this strike to see if they close the position out, because it'll change everything. Right. So that's again, at this point, the move, in my opinion, has already kind of happened. Not that you want to chase, but you just got to let the data do the talking now. So now I would just wait and I'd be patient, and I would be trying to wait to see whether or not they can get above or not. And then I would prefer to play retests, like get above the charm flip, then retest and then go long versus just buying it the minute we get through it, because they could easily sink it back down. What is your usual approach when you trade 0DT in combo with Gex? You only trade specific time of day? You trade it's actually a great question. So on a daily basis, I do probably more scalping than I do anything else, unless there's a very specific setup that I like off of this. So for instance, today, what I was doing, and I think I explained this earlier, I was watching it very closely after I saw those long calls come in because they got smoked yesterday. I was waiting for us to get into this negative pocket to see what happens. So the way that I played this is I waited, and then I got the retest down here, and then I was able to get a long off. And I just went straight long calls, right? So, or you could go long futures. I didn't do long futures on this though. In the in between when I'm scalping, I'm usually just using like futures just because it's faster, easier, and there's less thinking. Um, but this is how I would play it. Now, on other days, there's specific setups that I take specific things. So I will only take fly trades, and this is just me personally, in positive gamma environments into a gamma peak. And that's the only time I will trade it. And it has to be a high enough risk to reward for me to want to take it. If we're in a negative gamma environment and I have a little less confidence on the timing because we're not moving as erratic, yet, like in here, I had a lot more confidence because we were moving a lot more erratically, and there was a bid in the futures market and so on. I'll play spreads, long spreads. The only time that I will sell premium is when we push again into these gamma magnets or pockets with a lot of positive gamma that I don't think we get above. and there is significant enough premium for it to be worth the risk I'm taking. Okay. Yes. When I say a fly, it's out of the money. I'm playing for a move to it. And then the way I manage my trade is the minute I get a 2x on my fly, I take half of it off. So now the trade is paid for. And then everything after that is gravy. But that's just the way I manage my risk because you got to remember, I'm also scalping the in between, usually in the futures market. So I can have my fly on, forget about it, let it do its thing while I, feed whatever else I need to feed with the other trades. But there's no like specific times of day. The one thing about all this is just patience. Right now, if you've been a momentum trader or even a mean reverting trader, you've been blessed with negative gamma where that type of trading really works if you're good at it. Other people look at that and say it's so erratic, I can't trade it, and they dislike that environment, right? Me, on the other hand, I love it. I like the increased volatility because I feel like I'm good enough to be able to take advantage of it. That's all. Then when you flip into the positive gamma environment, it's much more structured and it's slower, right? So you have maybe a little less risk, but that's where determining what kind of trade you're going to take is a little bit more important, and where your entries are and how you're going to build out the trade based off the data, if that makes sense. I usually never hold my positions into end of day and let them expire ever, especially the last 10 minutes, 15 minutes. There's just too much uncertainty with mock that I just dislike. So I'm always managing mine. Like I said, if I'm in a fly, almost every time I'm going to take it off at 2x, 2.5x, half the position just so it's paid for. But that's just how I manage my risk. And then everything after that's gravy. There are other times where maybe I'm up 2, 3x, and I'm like, yeah, I've had enough. But the timing of flies is what's important. There'll be times where you're in a fly trade, and if it starts taking off right away, you're not getting the decay of that middle part of the fly, right? So you're not really making a whole lot. So that's why I only take it in certain environments because I need part of that decay. Negative gamma is just not my thing unless I am confident that we're going to pin and go somewhere. But that's just my way. Oh, when a trade goes against me. Well, that's why. Okay, if we're talking about a fly, I hold it. I'll hold it to zero for a fly every time. But that's why I'm only taking them at certain times when I have high confidence in what it is, and the risk to reward. The risk is very minimal, and then I'll try to scalp the in between to get that paid for anyway. Right. But if I don't scalp the in between and I take a fly trade, me personally, I'm holding it to zero. But I'm also not taking a fly that costs me 5, 6, 7, 8, 9, $10. I'm taking one that's cost me $1, $2, $3 in a less expensive premium market. On the other end, if I was selling premium that went against me, it just depends. Either I'm just going to cut the trade, or if we're going through negative gamma, even though I don't do this, let's just say someone had sold calls today into all of this, right? And we're going through this negative gamma. What you could do, and I'm not saying you should do it, is you can morph your trade. So you would close out your short end, keep the long leg, and hope that that offsets whatever you lost on the short leg, right? But that's part of risk management and something you'll have to figure out on your own. No matter what you're doing, whether it's, especially on the short options, there's a lot more risk, than there is, doing the long side. But you know what your risk is on the long side too if you're going to hold it to zero. So if it goes against you, you got to figure out what that is. Joe said, remember to talk about table heat maps. Yeah, depth view. So let me talk about this and then we'll cut it after this. All depth view is it's the same thing that you're seeing on customer positioning, but on a table with all the expirations. So I have mine set to positions and all of these range of expirations, and I have it set to customers. You could set it to market makers if you want to see where there might be potential large positive gamma areas or negative gamma areas, right? Which is probably the easiest way to use depth view. So if I adjust these strikes, let's put them to, let's go 6,600 to 6,900. All right. I could see right here for today that large negative gamma number, right? From a market maker perspective, they're short 23K contracts here, right? From the long calls that people have been in, right? So I know that 6850, they're also short. Then I know that there's some positive gamma building here with negative gamma here. So all this is just giving you the positions inside of a table versus seeing it on a bar chart. There's no difference. The beauty of this view is I can look at multiple expos for each of those. So the way that I would use depth view is I look at my SPX positioning, and this is probably adjusted from when I was messing around today, but I'll put specific, I'll put the whole week of positions on, let's say, or for next week, I'll go through OPEX. I'll look for, this is just the call side. So let me switch this to none. I'll look for some large positions and say, okay, through OPEX, 68.30 is large. That's from today, actually. So let me remove that one. Okay, so I'd look here and say, okay, first positive area, 6,900, a lot of negative gamma at 6,850. Then I would go to my depth view and I'd figure out what expiration it's on. So if I'm looking for 6,850, right, or what is the other one, 6,900, I would just go and see which expiration has those larger levels. That's all this is. It's just another way to like look at the data and you can see all the expirations for the larger parts. So if you want to start paying attention to tomorrow's positioning, right, you can see what we have today and then you have tomorrow's. You can see where there's some potential inflection points, where there's support. So like tomorrow, there's support at 54.82, which is 6,800. Okay, maybe that'll be interesting into end of day today if we can bounce off of it, or we pin to it or whatever it is. So that's all this is. Just another way to do the data. Cool. Cool. All right. Well, hopefully this was helpful for you guys. I will talk to them and make sure that we get this one uploaded as well as the one from last Thursday that I did. I'll be on Tuesday again. We'll do another one. I'm just going to keep drilling the basics and talking about current positioning and keeping it nice and simple. Once you guys get used to all of this, you'll probably get sick of me talking and you'll be able to read all this mostly on your own. At least that's the goal. But again, ask your questions, keep bringing them back. I'm always here to help in any way that I can and give you my way of reading all of this and trying to make this a little less complicated for everybody. And then just be careful who you follow online. I'll leave it at that. Catch you guys on the next one. Thank you.